Hello and welcome back, students. Today I'll be giving some tips and advices about some other chapters. Like today, I'll start with national income. This is a block of national income in which the first thing is circular flow of income. In the circular flow of income, you need to do the two sector model, three sector model, four sector model, all the three. Please do remember that when you are writing an answer about circular flow of income, then in the answer, in the written part, you must mention that savings is a leakage and investment is an injection. Why? Savings is leakage, investment is injection, and also you need to write why. This is a must thing to write. Yes, the diagram you will make, and apart from the diagram, you have to explain the diagram briefly about the circular flow of income. More important is two sector model, but this time it may not be so probable. Anyway, it may come. Now, after that, you have the national income aggregates or the concepts, national income aggregates or the concepts like GDP, GNP, NDP, NNP. These basic concepts, you need to know the definition or the meaning and also the differences. Like you may be given a question, distinguish between GDP and GNP. So the difference, firstly, you write the meaning and how we convert from GDP to GNP. That you need to know or to write. Then factor cost and market price, the values, the value, the factor cost, the value at market price, these. And then what is national income? Which concept is called national income? NNPFC, net national product at factor cost. That is national income. So these concepts you need to know. And after that, in these chapter of national income aggregates or concepts, you need to know how we go from national income to private income to personal income to personal disposable income. First, see national income NNPFC minus net income factor income from abroad NFIA. We get domestic factor income NNPFC minus NFIA net factor income from abroad. We get NDPFC, that is domestic factor income. Okay, now domestic factor income minus income from property and entrepreneurship accruing to government, all incomes going to government, minus savings of non-departmental enterprises of the government, those which are government enterprises, government companies. Then we get income from domestic product accruing to the private sector, income accruing to the private sector from domestic product. Now, along with this, in addition to this, we have to add something, and then we'll get the private income. So, income from domestic product accruing to the private sector. With that, we have to add certain things like net factor income earned from abroad, net interest income on national debt. That means the people who have bought the government shares and they are earning their dividends from the government, that is interest on national debt, plus transfers from the government, and also plus net current transfers from the rest of the world. Four things are to be added with income from domestic product accruing to the private sector. What four things? Net factor income from abroad, interest income on national debt, then transfer incomes, unilateral transfer incomes from government, and net current transfers from the rest of the world. Then you get private income. So from national income to private income, in this way we can convert. Then after we get private income, from private income, how do we get personal income? Private income minus undistributed profits, minus net retained earnings of the foreign enterprises, minus contribution of the enterprises towards social security schemes, minus corporate taxes. So from private income, if we deduct all these, that means all types of income that accruing to the private enterprises, then we get total income earning of all the persons in the country, and that is personal income. Okay, after we get personal income, from personal income, how do we get personal disposable income or disposable personal income, DPI? Personal income minus direct taxes paid by the households, paid by the common people to the government, direct taxes. Also, we subtract minus other miscellaneous taxes and other miscellaneous payments to the government administrative departments. Then we get personal disposable income. Okay, so these are very important concepts. That is, all these private income, personal disposable income. Now, from this chapter of national income aggregates and concepts, uh, the next thing that you need to do is nominal GDP and real GDP. Nominal GDP is the GDP where the values of the final goods and services are taken into account considering the prices of the goods and services which are prevailing in the current year. In the current year. And whereas when we consider real GDP, that is GDP at constant prices. Okay, GDP at constant prices, that is real GDP, where we take the values of the goods and services, final goods and services, which are produced within the domestic territory or boundary to the country, by the citizens of the country, by the residents of the country, within the boundary of the country. But here we take into consideration the prices of the goods and services not prevailing in the present year, but in a previous year, which is taken as the base year. Okay, so this is real GDP. Okay, so this is the second chapter in the block of national income, that is national income aggregates or concepts. After that, you have the third chapter in the block of national income, which is methods of measuring national income. That's damn important, very important, because using the methods, you have to do the sums, numerical problems compulsorily. It will come definitely. Three methods are there: expenditure method, income method, value added method. Okay, expenditure method, firstly, C plus I plus G plus X minus M. Private final consumption expenditure plus gross domestic capital formation or gross domestic investment expenditure plus government final consumption expenditure plus net exports minus imports. By adding these, we get GDPMP. By adding these, we get gross domestic product at market price, GDPMP. Now, GDPMP minus depreciation or consumption of fixed capital, we get NDPMP. NDPMP plus net factor income from abroad, NFIA, we get NNPMP, net national product at factor cost at market price, NNPMP, net national product at market price. And the last step, NNPMP minus net indirect taxes, where net indirect taxes means indirect taxes minus subsidies. So NNPMP minus net indirect taxes, we get NNPFC, and that is national income. So this is the basic method of expenditure method, the basic steps. In this method, there may be a modification given in the question, like if instead of gross domestic capital formation, if it's given net domestic capital formation or net investment, then there'll be a little modification. Right in the first step, now here C plus net domestic capital formation plus government expenditure G plus X minus M, that is net exports. Now we get NDPMP directly in the first step. Right in the first step, we get NDPMP. NDPMP, once we get it, then plus NFIA, we get NNPMP. NNPMP minus net indirect taxes, we get NNPFC, that is national income. So this is expenditure method. Now, income method. Income method, the steps: compensation of employees, which consists of basic salary and wages, supplementary labor income like bonus and HRA and DA, these are supplementary labor income. Then you have payments in kind like free or subsidized food, free medical facilities, free housing facilities, all these are given. Also, along with these, we have in the compensation of employees what? The social security contribution of the employer to the employees, given to the employees. So these are the components of compensation of employees. So compensation of employees plus operating surplus. What is operating surplus? Operating surplus is the income from capital, assets, properties, and entrepreneurship. So operating surplus consists of rent plus interest plus profits. If in the question royalty is given, take a royalty. So rent plus interest plus profits, this is operating surplus. So compensation of employees plus operating surplus plus mixed income of self-employed. These three added, we get NDPFC, that is domestic factor income. After we get NDPFC, only one more step. NDPFC plus NFIA, net factor income from abroad. Then we get NNPFC, that is national income. This is income method. Now we come to value added method. What is value added? Value of the final output minus value of intermediate goods used, intermediate consumption. So total value of final output produced in the whole economy in primary sector plus secondary sector plus tertiary sector, total value of final output minus total value of intermediate consumption. Then we get gross value added at market price. Gross value added at market price, that means GDP-MP. Now once we get GDP-MP, then you may do the next few steps in one shot, at one shot. That means all together you may write gross value added at market price minus depreciation or consumption of fixed capital plus NFIA minus net indirect taxes. We get NNPFC or national income. So these are the three methods. Please do these steps of the national income estimation methods very nicely, very properly, because you have to use these methods in the calculation of national income. The sums, the numericals will be given. Right? This is done. Now, at last, at the end of this chapter, what do you have? You have precautions and difficulties in each of these three methods. Please do it. Precautions and difficulties in the, this is completely theoretical, but you need to understand the precautions, like second-hand goods values are not to be taken into account. Then values of self-consumption food items by the farmers are to be taken into account. Then housewife services values are not taken into account. Then purchasing and selling of shares, which are mostly second-hand, are not to be taken into account. So then value of self-occupied houses to be taken into account. This type of thing. These are the precautions and difficulties in the methods of in each of the three methods. You need to learn separately. Precautions and difficulties for income method, precautions and difficulties for expenditure method, and precautions and difficulties for value added method. All the three. Fine. That's all. That's about the national income block. In the national income block, you need to do all these. Okay. Now, if I move on to another chapter, okay, let me consider theory of consumer behavior. Chapter number 3, according to Frank's textbook. Okay, I may not be referring to any textbook, but still, theory of consumer behavior. State the law of diminishing marginal utility. What is the relationship between TU and MU with the help of diagram? Then you have the assumptions of the law of diminishing marginal utility. Then you have the consumer's equilibrium for a one commodity case, consumer's equilibrium for a two commodity case, where you need to learn by heart the law of equimarginal utility principle. That law of equimarginal utility, learn the statement of the law and also the explanation of this law along with a numerical example. You can be given a numerical sum based on this law. Okay, that is consumer's equilibrium for a two commodity case. MUX by PX equal to MUY by PY is equal to MU per last 1 unit of money. Okay. Then we come to the cardinal utility con. Now we come to ordinal utility, that is indifference curve. What is an indifference curve? What is an indifference map? What is MRS? These are short questions which are probable. Then characteristics of indifference curves, very important. Consumer's equilibrium using indifference curve analysis. What is budget line? Now please do remember, when you're writing the definition of budget line, you have to write given the price of the commodities and given the income of the consumer. Don't forget to write this. Okay. So and also in this chapter you need to learn one topic, which is difference between cardinal utility analysis and ordinal utility analysis. Okay, so in a nutshell, I've told what you need to do about in this chapter, theory of consumer behavior. Okay, so today I'll end here. Tomorrow I'll come with some more chapters, maybe some conceptual chapters. Thank you.